Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Welcome, you're watching Business Today Television. I'm Sakshi, Batra, and this is a special edition where our focus is on the Q3 earnings, and the company on our radar today is PB Fintech, the parent entity of insurance aggregator Policybazaar, which has reported a net profit for the very first time in the third quarter. It clocked in a profit after tax of 37.2 crores for this third quarter, the December quarter, and in fact, this is against an 87.6 crore of a loss that the company had posted in the corresponding quarter of the last fiscal as well. The revenues from operations have also seen a sharp jump of 43% to 871 odd crore rupees against 610 crore rupees in the corresponding period as well. To share more insights from the quarterly earnings, I'm now joined by the top management of the company. Yashish Daya, the chairman and CEO of PB Fintech, joins in. Also with us is Alok Bansal, the co-founder and executive vice chairman of PB Fintech. Welcome, gentlemen, and thank you so much for taking the time out for this discussion on Business Today Television. Mr. Daya, to you first. You posted your maiden profit after being listed. Congratulations on that. Last time I spoke to you, you were pretty confident of turning things around. The street has also rewarded you for that. 13% uptake. The stock's back above the issue price after 2 years. What really worked for you this quarter? And will this growth on the bottom line be sustainable is the question that most of the analysts are now wanting to understand from you.
Yes, our view on our business has not changed at all, but I think when reality happens, people reward you for that reality. Every time our revenue grows, there's something called operating leverage in all internet businesses, and we have an operating leverage, and what that means is every time our revenue grows by 1 rupee, roughly 30 paise flows to the bottom line. That's the operating leverage of our business if you really think about it, right? And if you look at the first 9 months of the year, because quarters can be sometimes deceptive, although quarter will give you the same picture this time. Then our revenue has grown by about 500 crores and about 170 crores is the differential adjusted EBITDA gap. And so that's 34% of the revenue. And this will keep happening. So as long as we are growing, so suppose we grow 30% in a year, then roughly 9% of our revenue will be added to the bottom line. And so what you call EBITDA margin will keep improving by 8-9% every year for the next few years. Okay. So I don't think this is a 1 quarter story in any way. It's a long-term trend. If you look at the last 7-8 quarters, every quarter over the same quarter previous year, our EBITDA and PAT, EBITDA is about 50 crores plus extra, which means about 200 crores a year. And the PAT is of course about 500 crores a year delta, but there are various other pieces that move in the PAT. PAT, you may see somewhat higher movements, but I see no reason. Now look at a 30% growth, right? We are today at 3,600 crores. So next year we should add 1,000 crores of revenue. That means there should be 300 crores of additional EBITDA flowing into the business. And that of course has a meaningful impact on the PAT.
Right. So with that, could you give us a sense of where do you foresee your bottom line going forward? I believe there was an initial guidance that you had on the profit after tax of 1,000 crores. Are you looking at that figure now achieving much earlier than expected? Also on the margins front, what is the kind of sustainable band that you are expecting your margins to be at over the next 1 or 2 years, sir?
So let us stay with that 30% of revenue pieces only. If you look at 2021 and 2024, our revenue is 4.3 times, right? So if you look at 24 and 27, if you want to be conservative, you would say, okay, our revenue will be maybe over 2x, which is half the growth that we had in the last 3 years. If the revenue today is 3,600 crores, and we thus will be increasing revenue by 3,600 crores, 30% of that is more than 1,000 crores.
Yeah.
That is exactly what gives you the 1,000 crores. This year, we have already broken even on PAT. We have the strongest quarter yet to come. I would say somewhere between 50 to 70 crores profit we should have at the end of the year. So I think it's a very simple business. It's an operating leverage business, which as it grows, has more and more contribution towards profits. It is not about cost control. It is about scale and revenue growth. And please do appreciate that every time we grow, we still have to grow our cost by 70% of that growth.
Yeah.
But 30% does flow to the bottom line.
Okay. What about the new initiatives business, sir? By when do you see those getting break even?
Alok, do you want to take that?
Sure. So, see, new initiatives are very, very critical for us right now because we are looking at new initiatives to get to a even much higher scale. And that scale helps us in multiple ways. So we don't have a specific target that when do we want to get break even, but we hope that FY27 is the year when at the EBITDA level, those initiatives are break even. Right now, they are break even at the contribution level already. But having said that, new initiatives loss or a profit is not going to be a material number out of the 1,000 crore.
Okay.
So whether it is a little bit this side or that side is not going to be very, very material. For us, new initiatives are more strategic. It gives us scale. It gives us a lot of flexibility in terms of what we want to achieve and deliver.
Okay. And Mr. Bansal, if you could also expound upon, what is the thought process of the company now going forward from here? How do you plan to scale your business from here? Say, where are the next growth drivers really going to come in from? Or do you think strengthening the current business is what you have, is what you want to focus on for the time being?
So there are two parts here. See, one is, what is our current business? Our current business is that we need to get customers to come to us. We need to understand more and more about the customers and their disclosures by using data, tech, all those things. And we need to have a very strong operational layer in terms of sales, in terms of service, renewals, claims, endorsements, everything put together. Right? So we definitely would want to invest more and more towards becoming better at these things and becoming more efficient. That's the first part. The second part is, what part of the value chain are you able to control and give a better experience to the customer? So we want to go deeper into the value chain. So at one end, you are looking at us getting into reference broking, where we want to look at the product creation with our partners. The other hand, you are seeing, okay, yeah, these guys are also creating some digital models. These guys are going ahead and also doing some claim servicing for the customers. So we want to be end-to-end and very deep into the value chain. But these are the two very clear focus areas. How do we become more efficient in the current business and how do we go deeper into the value chain?
Okay. Let me get Mr. Daya's view on the same scale of business that you're looking at, especially on the insurance broking business that you're looking at and scaling on that. How do you see the government's plan on launching Bima Sugam sooner or later, and how will that impact private players like you?
See, I think both ONDC, Bima Sugam, all of these should expand the market as far as insurance is concerned. And I think people like us will only gain from that as the market expands. Today, a very small proportion of the population buys health insurance and life insurance in the first place. And if you know, we've been single-handedly, in a way, we've spent more than 1,000 crores over the last 16, 17 years building awareness for these products, and that awareness helps us conclude transactions. I think all these efforts will also increase awareness and increase trust in the consumer to buy more and more insurance. So I think it's a very positive move. We are very confident of our operational capabilities and what we have built in terms of being able to continue adding value to the consumers.
Okay. Fair enough. Mr. Daya, you did point out that your strongest quarter for the year is yet to come, Q4. What are your key expectations from your key, revenue contributors, the premium generation that you're looking at, maybe the credit dispersals? What is your own sense that you can give us?
See, when we started the year, I was a bit worried because last Q4 was a very strong quarter. And so growing off that strong base, I always told our team that Q4 will be a challenge on a year-on-year growth basis because we've had such a strong quarter. But you know what happened? In Q3, we beat last year's Q4.
Yeah.
And that means beating JFM of insurance in October, November, December. That's almost unheard of, right? So I feel very confident, and while we don't give, outlook on these things, when I look at our January numbers,
Okay.
they are much better than our Q3 numbers in terms of growth rates. So I feel extremely good. Not much can change within February and March, although we had a very strong March. Let's see. Let's see. I feel very confident that we should be in a similar growth range to this year, this quarter, in the next quarter as well. And from a profit perspective, I think we should be about double the profits that we were this quarter. So that's why I feel confident about the 70 crore. I like to say what I have in my mind. I think we should be at about 70 crores profit. That's my thought process. It's not a guidance or anything. That's what I think. I think we should be around there.
Fair enough, sir. Fair enough. Mr. Bansal, let me get your view on the recent move by the RBI on the unsecured loans. By now, it's almost like 3 or 4 months. You would have been able to analyze what has been the impact. Was there a significant impact on Paisabazaar this quarter of the guidelines that were given by RBI, or do you foresee some more impact to come in the coming quarters? Give us a sense of how have you analyzed this.
So in the short term, you're right. There has been a small impact because suppliers have tightened the whole credit supply that was available to us. But having said that, again, we do very different sort of business. Our unsecured lending is typically 3 lakh rupees on an average, which goes to the platform. The stress which was coming in was from a very low ticket size credit. We don't have a very large share of that business where you are lending 10,000 rupees, 20,000 rupees, or 50,000 rupees. But from supplier perspective, yes, there was some tightening. We are working with our current suppliers. We are also looking at getting some new suppliers onboarded. So yes, in the current quarter, which is quarter 4, there will be a little bit lower growth rate. So if you were growing at 40%, if you wanted to grow at 45%, we may grow at 30-35%. But beyond that, I don't think it's going to have a very long-term impact on us as such.
And lastly, Mr. Daya, of course, we are one day ahead of the interim budget. I have to ask you, what is on top of your wish list from the finance minister, even though it is a vote on account, and she herself has doused some of the fire right there to not have too much of expectations. But what is on your top ask?
See, insurance in the developed world is provided by the government. In the sense, social security is provided by the government. And what we are, and I'm very specific here, I'm talking about risk insurance. When people invest to protect themselves in case something like death, disease, and disability happen, component, I think it should have an unlimited tax break. Because how much can you invest in term insurance and health insurance, right? You cannot invest a couple of lakhs in that every year, right? And I think that should be a separate category altogether. Also, these products should not attract GST, etc. Because see, this is something that in many parts of the world, the government provides. So taxing these things, according to me, is self-defeatist. And it defeats the purpose of consumers going ahead and kind of creating an insurance blanket for themselves. I am, by the way, not talking about the savings area. Please appreciate. I'm not even talking about motor insurance. I'm only talking about health, term, critical illness, where people protect against a bad event and they will get nothing back if the bad event does not happen. That part, taxing that further, I think does not make sense. I think somebody has to just have that wake-up call and just do it.
Point taken. Mr. Bansal, your takeaways or your expectations from the upcoming budget?
No, I think I agree with Yashish. We need to do whatever we can in terms of increasing the insurance penetration, especially for the protection products. There's also an opportunity with the MSME sector, where, MSME sector, when they look at the corporate insurance for the employees, today are not able to get some GST input credits and all. So yes, there are multiple things, but as you rightly said, this is the interim budget. So I don't think the industry should expect huge amount of intervention at this level, but we need to engage continuously with our regulator and with the ministry to see some of these things as years progress.
Okay,
Sakshi,
fair enough.
I just wanted to make one comment.
Yes,
the entire retail and health and term insurance market put together in this country is about 50,000 crores. So if you make it entirely tax-free, assuming that on average people have a 20% tax bracket, the people who buy these products, we're talking about 10,000 crores. It's not so much. And it sends a very good signal. And it's a huge social security builder. So, and it helps people make that decision, right?
Yeah.
So it's not a big ask, and I think it should be delivered. It is just maybe the voice. Our voice is very lonely, and so the interests are not so heavy in terms of getting this part protected, and so it's not probably reaching the right people.
Okay, we will ensure that it reaches the right people through our platform right here, and I will, along with you, push for this. We need to let go of the taxation, especially on the social security needs of the people of our country, especially on health and term insurance. So that is something that the finance minister, I hope she hears this and implements this and delivers this as soon as possible. Many thanks, gentlemen. It's been always a pleasure to speak to you. Congratulations yet again on the quarterly earnings, and all the very best for the upcoming quarters too.
Thank you.
Very much.
All right, we will wrap up this very special conversation with the PB Fintech's top management. The management is confident of not only having delivered in this quarter, but sustaining it in the upcoming quarters as well. A confident voice of Yashish Daya on doubling the profits from the current levels going forward from here. And of course, we've seen the street rewarding what they have turned around. Let's see if they can really deliver that promise of continuing to perform on the financials front, even in the upcoming quarters as well. With that, we wrap up this edition, but do stay tuned. A lot of earnings interactions follow on Business Today TV.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today. Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today. 32 years of leadership, innovation, and business brilliance. Subscribe now.
Good afternoon, ladies and gentlemen. Welcome to our special episode on the pre-budget expectations from the interim document